You're checking your portfolio again. That's the problem. Right now, with NASDAQ down 4.18%, you're refreshing your trading app like it's going to change something, like the numbers care about your anxiety. How much has that cost you? By the end of this, you'll know exactly why Marcus Aurelius would see today's market drop as the greatest opportunity most investors will completely waste. While everyone else is paralyzed by fear, the Stoic investor operates from a completely different framework, one that turns market chaos into systematic advantage. Here's what's really happening right now. The VIX is sitting at 21.51. That's elevated anxiety territory. But you already knew that because you felt it in your chest when you saw your portfolio this morning. Riley Chen felt it too. I watched him yesterday, silver reading glasses, catching the light from his multiple monitors, eyebrows dancing between hope and panic with every price movement. Marcus, he said, I know I should stay calm, but when I see these numbers, that's where most investors live. In the gap between knowing what they should do and actually doing it. Between intellectual understanding and emotional mastery. Marcus Aurelius understood something about this gap that we've forgotten. He wrote, "You have power over your mind, not outside events. Realize this, and you will find strength." He wasn't writing about investing. He was writing about empire, about life and death decisions that affected millions. But here's what matters for us. He wrote those words during the Antonine Plague. Rome was falling apart. The economy was collapsing. People were dying. And he was making decisions, not emotional reactions. Decisions. The market doesn't care about your feelings. Your portfolio doesn't respond to panic. Fear is information, not instruction. This is where the Stoic investor separates from everyone else. While the crowd is asking, "What's happening to my money?" the Stoic investor is asking three different questions entirely. First question, what can I control right now? Not what you wish you could control. Not what you should be able to control. What can you actually physically control in this moment? You can't control that NASDAQ dropped 4.18%. You can't control that Bitcoin is down to 60,718. You can't control that Solana fell 4.24% overnight. You can control your next decision. Marcus Aurelius would look at today's market the same way he looked at barbarian attacks on Rome's borders. External events demanding internal discipline. The emperor who controlled the known world understood that the only real control he had was over his own choices. Second question, what is this teaching me? Every market movement is data. Every drop is education. Every surge is a lesson in human psychology. Today's sell-off isn't punishment. It's revelation. It's showing you exactly how much of your investment strategy was based on hope instead of principle. How much was emotion disguised as analysis? Riley Chen learned this the hard way. I thought I was being rational, he told me after a particularly brutal week last month, but I was just being emotional in a spreadsheet. The Stoic investor sees volatility as curriculum. Marcus Aurelius faced 15 years of warfare, plague, and political chaos. Each crisis taught him something about leadership, about decision-making, about the difference between what appears urgent and what actually matters. Your portfolio dropping today is teaching you the same lesson. The question is whether you're paying attention. Third question, how does this serve my long-term objective? Not your short-term comfort. Not your daily mood. Your actual, written down, mathematically defined investment objective. Marcus Aurelius wasn't managing an empire for quarterly results. He was building something that would outlast him. Every decision was filtered through that lens. Every crisis was evaluated against that standard. When NASDAQ drops 4%, the amateur investor sees loss. The Stoic investor sees displacement. Assets moving from emotional hands to rational ones. Value becoming available at temporary discounts. The same companies that were worth buying yesterday at higher prices are now available at lower prices. The same business fundamentals that supported your investment thesis haven't changed because the stock price moved. But here's the part most people miss. This only works if you built your investment strategy on Stoic principles from the beginning. If you bought stocks because everyone else was buying them, today feels like disaster. If you bought them because you understood their intrinsic value, today feels like opportunity. Marcus Sterling showed me this during the March 2020 collapse. While everyone else was selling, he was calculating. Not from greed, from discipline. The principles don't change because the price does, he said. Those weathered hands steady on his keyboard. Fear creates mispricing. Mispricing creates opportunity. Opportunity creates wealth. The Stoic investor's advantage isn't emotional control for its own sake. It's emotional control in service of better decisions. When you're not paralyzed by fear, you can think clearly. When you can think clearly, you can act rationally. When you act rationally, during periods of irrational market behavior, you profit from other people's emotions. This is why Marcus Aurelius would see today's market drop as confirmation, not crisis. Confirmation that most people make investment decisions from emotion. Confirmation that markets regularly misprice assets based on temporary sentiment. Confirmation that patient capital deployed during periods of fear generates superior long-term returns. The emperor who meditated before battle understood that external chaos demands internal stillness. The investor who practices Stoic principles understands that market volatility demands strategic discipline. So while everyone else is checking their portfolios obsessively, asking when the pain will stop, the Stoic investor is asking different questions. Better questions. Questions that lead to profitable answers instead of profitable anxiety. The market will recover. It always has. It always will. Not because of optimism, but because of mathematics. Because human ingenuity compounds over time. Because the businesses you own will continue solving problems and creating value regardless of what their stock prices did today. Your job isn't to predict when that recovery happens. Your job is to be positioned properly when it does. To have capital available. To have courage intact. To have strategy unchanged. Marcus Aurelius ruled during Rome's golden age not because he avoided crises, but because he used crises to strengthen the empire. The Stoic investor builds wealth, not by avoiding volatility, but by using volatility to strengthen their position. Today's NASDAQ drop isn't happening to you. It's happening for you. The question is whether you have the discipline to receive it as education instead of punishment. Knowing the principle isn't enough. The next video shows exactly how to apply it.